Hey you guys, so we back with another video taking you guys with me on my trading journey. Right, so today's video is me showing you guys what I need to see before I enter a trade. And we will be looking at GBP JPY. So first and foremost, before I enter the market, I need to clearly know which way the market is going. Is it in an uptrend or is it in a downtrend? And how you distinguish that is by going to the higher time frame, which we are on now. We're on the 4-hour time frame. And let me take, and clearly it's showing, really, you see that the market, hold on 1 minute. Is in a uptrend. Higher high, higher low, higher high, higher low, higher highs. Right. You see it's going up. It's trending up. So now that we know it's in an uptrend, I'll delete that. We good to move forward. So since we've checked the higher time frame, it's showing that it's in a it's trending up. So then we mark our zones, and I like to mark on the 4-hour or the hour, no less than that. So here we are on the hour time frame. And here are my key levels. Here is my supply zone, and here is my demand zone. Basically, all that is just where the institutional big players are buying at, right? So supply, the buying pressure, I'm sorry, supply, the selling pressure is high. The demand, the buying pressure is high. That is all that means. Okay, and I trade supply, demand, and liquidity graphs. So perfect. So we're going to back test this to see if we can get a clear entry. All right. And again, we trade with the market, not against the market. Okay, so we're going to hit play and let's see how it plays out. And why my supply and demand zone is marked like this, because it touches here, it touches here, touches here. It's showing that this supply zone is being respected as well as this demand zone is being respected. And here was a slight liquidity grab. When I see something like this, when it breaks my demand zone and does a liquidity sweep, if it closes back above my demand zone, I will enter. That matches all my criteria for me to enter the market. If not, I patiently wait. If it closes below the demand zone, I wait for a clear confirmation, like a bearish engulfing candle, and then I possibly enter the market. So let's see if we can get a good setup. Oh, basically we did have one right here. This was a slight liquidity grab right here, and it closed above my zone. So I would have entered. I would have entered right here. I will enter right here. Let's just see. Let's just see what happens. 15. So we're gonna go down to the 5-minute time frame. I mainly enter on the 5-minute. No, matter of fact, let's just delete that and let's just see how it goes. But The chart is cleaner when you on the hour, 4 hour, hour and 30 minutes. You get a clear view. So let's just see what happens. If maybe we can get another entry point. And what we do is a patience game when it comes to trading. Like, you just have to stick it out and just wait and just make sure everything meet your criteria. If not, don't rush it. Don't just try to enter a trade because you want to be trading. That's when mistakes come in, and that's when it just get ugly. Okay. Okay, let's see. And even if it come in my zone, I still don't enter because that's not clear confirmation for me. It has to break below my zone or above my zone for me to enter. Let's see what we get. Okay. And again, like if I feel rushed, attached, or unsure, I step back. Like, I just step back from the market. I don't execute no trades because I just feel like I have to be level headed, grounded for me to get into a trade. And that's just my rule of thumb. And again, okay, so it's nothing here. Bam. Okay, so it touched supply, my supply zone. Okay. And another thing, I prefer entering the market when the volume is high. It has to be high. If not, it's no point. It's no point. And okay, again, it tapped my supply zone. It's breaking above it a little bit and came back down. Okay. Well, we just gonna stop it right there. I don't want to make this video too long. So again, I'm gonna just go back to, let's go back to the hour time frame where I showed you where I would have entered the trade. Right here. That's exactly where I would have entered at. Right here. Once it came down, broke below my demand, did a liquidity sweep, and all that means is where money is sitting at in the market, where retail buyers have their stop losses sitting at, money sitting. So they grab that, then it'll come back up, close above, enter, bam. There we go. Let me know in the comments if this help you or what you want me to talk about next, and I'll see you guys in the next video.